Pedro, if you could just give us an idea of what is in that. It's a report on thematic ETFs, and what is that report trying to show, and what perhaps you can give a little bit of a preview of what it's going to reveal.
Sure, absolutely. Well, first of all, thank you so much for having me here. It's great to be here. And, in the thematic ETF report here at Global X, we're really trying to show how much the thematic ETF landscape has grown over the last few years, and it's very exciting to see the growth in the adoption of thematic strategies in investors' portfolio. Just at the end of Q3, just a couple of days ago, thematic ETFs here in the United States represented only about 2% of the overall US ETF industry. You're talking about an industry of about $6 trillion. It's actually getting very close to $7 trillion right now. And thematic ETFs represented just a very small portion, really reaching about $134 billion in assets under management. Now, if you actually look at the growth rate that we have seen over the last 12 months, the thematic ETF landscape has grown about 128% just during the last 12 months. So we're talking about the fact that back in Q3 2020, there were about $59 billion in assets under management in thematic strategies, thematic ETFs here in the United States. Now we're talking about that $134 billion that I mentioned, Leo. So clearly, adoption is there. We're continuing to see investors seeking to understand thematic investing, and they're having these conversations pretty much every day, right? Because one of the beauties of thematic investing is that you're talking about relatable concepts, Leo. When you have conversations with family and friends, and advisors are having conversations with their clients, they're really talking about their children playing video games, or family friends are driving a Tesla or any other electric vehicle. So you're clearly seeing that relatable aspect of video games. And here at Global X, we call that conversational alpha. Thematic investing, it could be just a small portion of your overall portfolio. It could be 5 to 10% of your entire investment portfolio. But when it comes to the conversations that you're having about your portfolio, you're likely going to be focused on these thematic strategies. You're going to be talking about video games. You're going to be talking about electric vehicles, robotics, AI. These are things that are happening on our everyday lives, or disrupting our own lives. We're having a conference right now via a cloud computing services. So these are things that are disrupting our everyday lives, and now investors can really tap into this space and invest in what they're seeing being disrupted.
When you observe a period of change where things do seem to be moving that rapidly, is there there's always the temptation to say this time is different, that we're watching something unprecedented and so on. Journalists love that phrase. To what extent do you think we should be cautious about saying that on this occasion?
Sure. Well, actually, thematic investing by definition is the process of understanding disruptive macro level trends, and then what companies are very well positioned to capitalize on that level of disruption. So by definition, these are long-term investment strategies. I would caution an investor to really think about thematic investing from the context of strategic asset allocations. They were, of course, tempted to look at these strategies in the short term, but in many cases, disruption is just getting started, right? And you look at robotic penetration, when you look at electric vehicle penetration, you're talking about very, very small penetration rates. And these technologies are very well positioned to benefit during the next 10 years. So short term, you're going to have some macro dynamics that are going to make investors worry. It could be China, it could be inflation, it could be interest rates, but these are strategies that could really mitigate many of those short-term market dynamics and position an investor portfolio over the long term.
Can I come to Isaac now? First of all, just to ask you, what did everything that Pedro say just then. What does it mean to you? And I'm thinking particularly about this question about the kind of balancing that you now have to think about when you have these very, very exciting conversations, these very dominant conversations that seem to mitigate towards, oh, well, this is what we should all be looking at and thinking about. We're all futurologists now. But actually, you've got to balance that with some caution. Well, what does all that mean to you?
Yeah, I mean, I think that term conversational alpha is fantastic because we are talking about megatrends. These are things that are big global macro trends changing the marketplace, changing the economy, changing the society that we live in. So we're living in it. We're talking about with our clients. They're talking about it with us. Increasingly, conversations are dominated by these questions. And I think 5 or 10 years ago, you could bury your head in the sand a little bit and ignore it. But now these megatrends, particularly technological advancement, it's like a really massive but slow moving train where you sit on it and around it, you barely see the landscape shift. But if you get out in front of it and try and stop it, you're going to get rolled over by it. It's coming, it's moving. And so it's important to be aware of it and look at these megatrends, look at these sub-trends. And I think, when we think about how this has developed over the last few years, if you go back before 2015, a lot of the conversations I was having was around sustainability, because that was what was front and center. Increasingly over the last 5 years, especially over the last couple of years, as Pedro mentioned, this has turned to technology. It's turned to disruptive technology and the way that we can access these themes that are long dated themes, but are already playing out. And we've seen it play out through the pandemic. There was a catalyst there that means that if you weren't thinking about it, if you hadn't been thinking about it in advance, if you hadn't been playing out some sort of scenarios or stress tests in your mind, or more formally, you really could have been sat on the side of these themes that have moved so quickly and potentially missed out on opportunities. And I think that Pedro's comments around conversational alpha are important because clients want to know about it, but they are real opportunities to take a long-term theme and generate alpha over the near and medium term.
Do you think that it's the pace of disruption that's changed, or, as it were, the quantum of disruption? That the disruption, when it happens, is that much more disruptive? Sticking with Isaac just for a second, I'll come back to Pedro after.
Yeah, it's a challenge, and the way we tend to think about disruption is the materiality of that disruption. Just how much is it going to impact the global economy or global markets, and then how challenging will it be for businesses to manage that disruption? And that gives us a bit of a framework about thinking about these themes and about megatrends. From our perspective, I don't think the pace of disruption has necessarily changed. It's more the awareness of it. And perhaps this is related to technological advancement and the ability of people to be very, very aware of everything that's going on. And on one hand, and then on the other hand, to increasingly be able to access those themes. If you go back 10 years ago or 20 years ago or 30 years ago, there was plenty of disruption going on. There were some very significant technological advancements that happened, but to access that, you really needed to be a very large asset owner and to be able to access either venture capital or private equity. And that was out of the realms of possibility for the average investor. It's out of the realms of possibility for a lot of high net worth investors, for that matter. So if we fast forward to now, the ability of investors to be able to mobilize pools of capital through things like ETFs and still access these disruptive technologies has completely changed. And I think that's an important development in the landscape.
Yeah, Pedro, sorry.
Sure, and I completely agree with Isaac. Clearly, ETFs democratize in investing and accessing thematic investing and accessing innovation. But at the same time, you're really seeing for the first time ever a lot of a confluence of technological change. And I'll give you a great example. What's happening today in the Internet of Things space is very powerful, right? You're seeing technologies that have been with us over the last 10 years. And now we're just starting to see the power that these technologies can have. What's very impressive and interesting from the point of view of an investor is that things like Internet of Things are transforming industries, right? You have an ability today to tap in the combined power of very inexpensive sensor devices, very inexpensive remote networks, a vast rise of cloud storage, and increasingly sophisticated algorithms that now can analyze all that data being generated by the sensors and the networks, and of course stored in the cloud, and analyze all that data in real time. So what's very powerful for companies and industries is that confluence of technological change is now providing an ability to monitor what's happening in the physical world around us, and to analyze that in real time, again with increasing data sets and things that these devices are tracking and monitoring. So now you can track correlation of change that begins to let you predict what could happen in the future, right? And that's very transformative, and why we think we're at the very cusp of a whole series of technological changes across our economies.
What actually at the moment do you see as the big opportunities? What are the clients asking you about most? There's an enormous amount to talk about. What, if you had to pick out one or two, would be the ones that are really at the top of your inbox at the moment? Isaac, starting with you.
Yeah, I mean, if we're focusing on technological advancements at the moment, that's gathered a lot of attention because we're sitting in a pandemic, as Pedro mentioned, and it's front and center for everyone. We're using it, but it's becoming increasingly clear that this is a pathway to finally kickstart productivity enhancements after years of low or relatively weak global productivity, particularly in developed markets. So, it's this area that is of particular interest. And then if we go down underneath some of the subtrends we look at, and these are not unique or new or anything, but automation, new fintech is a really big one. So there's one for us that sits sort of at the nexus of all of these, and that's cybersecurity. And it's sort of an area that we find is increasingly pervasive. It's obviously something very important for investors and for managers. But Pedro mentioning Internet of Things and automation, cybersecurity is really critical for all of these. And in our view, we find ourselves discussing this a lot as with clients as an area that seems likely to be able to deliver on the promise of structurally higher growth and structurally higher earnings. And after all, if you're looking for alpha, be it conversational or just plain old-fashioned alpha, you really are looking for something that can sustainably deliver better earnings growth or better growth over a long period of time. And this is an area that keeps cropping up time and time again with our clients.
Pedro, sorry. Yes.
Yeah, absolutely. And I agree with Isaac. Those are really very powerful themes when you think about artificial intelligence, when you think about Internet of Things, when you think about robotics, cloud computing. I would add a couple other thematic strategies that are top of mind for investors today. Video games and esports being one of those. Clearly, video games are becoming the new social media outlet in our society. You're talking about a very massive market, a market that it's about $175 billion. If we put that into context, that market is larger than the movies and film industry and professional sports revenues combined. So clearly, the opportunity there is massive. And again, it's really becoming that new social media outlet for many people around the world. Going back to the point around robotics and automation, today around the world, there are only about 110 industrial robots per each 10,000 manufacturing employees around the world. So if you think about that in a ratio term, that equals to about a 1% robotic density around the world. Now, if you look at countries like Singapore or South Korea, they tend to have robotic densities of about 8%. So clearly, there's an opportunity for the world to go in that direction, to pursue a greater automation, greater adoption of artificial intelligence, to try to combat some of the long-term structural things that are changing our economies, right? You have aging populations around the world, so automation is going to become more important. You also have rising wages in emerging market economies, so robotics are becoming economically feasible for companies to adopt, and a bunch of other trends are really pushing for greater robotics and adoption across our economy. So these are some of the thematic strategies that we talk every day about with clients, and they're increasingly adopting these strategies in their portfolios.
Where does that leave you in terms of allocation, where you've got something that exciting, and Isaac, as you said, cybersecurity, it straddles a number of these different areas of disruption. It can be applied in all sorts of areas. What do you then say on, in terms of allocation, where should we place the limitations on that excitement?
Yeah, it's a good question, and I think that role of the allocator or the advisor, the portfolio manager in a multi-asset portfolio is really critical here, because these are important and long-lasting themes, but they are a subset of the broader market, and as such, you'd expect them to be a subset of a portfolio. It would be unusual, I think, to go into a portfolio and see a cybersecurity fund or ETF be the core equity holding. That it's a smaller universe, even if you go global, which we think is appropriate. It's a smaller universe. That means it's likely to be more volatile, more risk in some ways. And so, you need to be thoughtful with your clients and with your investors about how you use them. And we tend to see these as satellites around a more core equity portfolio, and it may even be a satellite of a core technology holding. And it tends to be driven largely by how much risk the client can take on board, how much they believe in the theme. But it does have to be scaled appropriately.
Yeah. What do you think, Pedro?
Yeah, well, I think, pre-pandemic, clearly the conversation was around having a allocation to the portfolio, to thematic strategies in the portfolio of 3 to 5%. Post-pandemic, that changed completely. Clearly, we have seen now clients adopting thematic strategies to a greater degree. I'm talking to clients, and thematic strategies can represent 10 to 20% of their overall portfolio. In many cases, advisors and investors, generally speaking, are looking at these thematic strategies as a hedge to the traditional sectors in their portfolio. So say that you have a financial services allocation in the portfolio. It could be overweight or underweight your benchmark, but now you're overlaying a fintech allocation. So you're really hedging that financial services allocation in your portfolio for whatever disruption you're going to see happening in the financial services industry. And that happens across pretty much every single sector of the economy, right? You think about the industrial sector being disrupted by robotics and artificial intelligence. If you think about the energy sector being disrupted by lithium-ion batteries and electric vehicles, or new sort of commodities and clean tech and renewable energies. That's happening across every single sector of our economy. So that's really how investors are now starting to implement more and more these thematic strategies. And of course, if you're talking about younger generations of our economy and younger clients for advisors, millennials, Gen Zers, that happens to be even more. They're looking at these strategies. They understand what's happening across the technological landscape. So advisors want to incorporate these type of strategies.
What's happening in your view, just as a quick answer from both of you, is it that everyone has just become that much more aware of how, when we talk about disruption, it really means disruption? It's not just a sort of theoretical thing. Is that how we should interpret how your clients are having those conversations now?
Yeah, I guess that, disruption all of the sudden is tangible. Look at how we're having this conference right now, right, over cloud computing services. And of course, all of us can say that we have had some sort of a cloud computing event over the last 18 months or so. And again, video games, we're seeing our children playing video games more than ever. And they're not only playing alone and at home like we used to do probably, they're playing with friends and family, but they're playing online, right? They're playing with people from all over the world. So those are the trends that are becoming tangible around the disruption landscape.
Yeah, Isaac, just as a brief answer, would you say that those 18 months, the last 18 months, have been substantially different for you in terms of the conversation?
They've been substantially different, and I think what you're seeing is a lot of these very long-term impacts being brought to the forefront in people's minds and in the way they value these trends, and that has been a meaningful change. It hadn't happened for many years, but now it's front and center, and investors are talking about it and they want to know about it.